Welcome back, traders, to another installment of Nasdaq 100 weekly highs, weekly lows, technical analysis. I hope your trades last week went really well. I hope you're able to collect those amazing pips and points, the ones we all love and care so much about. I hope you're able to grab as many of those as possible. But now we're heading into the new week, which basically means we need to prepare. So everything I'm going to be discussing with you on this video is in preparation for week commencing the 25th of November. So with that said and done, if you're completely new to this channel and you haven't done so already, make sure you hit that subscribe button, turn on the notification and drop us a like, because I believe the content that I'm going to be sharing with you today, as well as all throughout the week, you're going to find super useful. What I normally like to do is I do analysis on the Nasdaq 100 and analysis on gold. Gold is the actual asset that I trade day to day or trade every other day, depending on what kind of position I've got in that market, right? So based on your interests, right, if you have the notification turned on, basically meaning as soon as I release the video, because we do live analysis, so it's not, we don't do hindsight strategy like, oh, look for this and if this happens that means you can do this. No, we do live weekly analysis based on live markets, what we need to do and how we need to do it. So because of this and this alone, I strongly recommend you turn that notification on. Even if you don't hit the subscribe button, at least turn the notification on, so that way as soon as the video drops, if you're trading NAS or you're trading gold, you can pop over to take a look to see what kind of ideas I'm talking about. It may be in line with your bias, it may not be, but bottom line is it will help aid thought, and that additional concept may be beneficial in my opinion. So with that said and done, we're going to get on with the analysis for this week, which is pretty much preparing us for Monday the 25th of November and the days that follow after. All right. So in the last video, I basically talked about the fact that price had gone into the new bearish FVG, right? So before it went into the bullish FVG, I kind of gave two vibes, which was either it's going to break through and create a new lower low, okay, and come into this zone, which it didn't do, right? Or it's going to push up. So what price actually did is it's coming to this bearish FVG, and this FVG in itself is derived from the day, so that's the 24-hour, okay, which I believe is the strongest FVGs to use. So that's where this price is derived from, where this area is derived from, sorry. So price has come into the FVG. So we came into the FVG. First entry into the FVG was last week's Friday, so that would have been Friday the 15th of November, okay, and it's pretty much stayed in this FVG for the whole of this week, and it's just now peaked into the new FVG, which is a bearish FVG, this red one up here. So with that said, we're going to get rid of this one down here because that's no longer relevant, okay? So price has gone in there and is moving away, so we don't need that anymore. But what we are interested in is this FVG down here, okay, to see if price comes into this zone, right? Or if price is going to continue on this journey upwards, okay? And obviously it's giving us a channel to say that it may continue its journey to the upside a little bit more and then may possibly break down. So this is what we're going to look into in greater detail, okay? So first things first, let's remove this weekly low tag over here or label, right? Let's get rid of that totally, and let's move this vertical line and let's move that over to the end of this week, right? So we know that this is where we're deriving our data from to help us for this week area over here, which should be week commencing the 25th of November. Then what I'm going to do next is I'm going to grab the FVG, I mean not the FVG, so I'm going to grab the Fibonacci, right? And what I'm going to do is I'm going to place that over the weekly lows and high for week just gone, right? So we're just going to plop that in there like so, okay? And then I'm going to move this horizontal line and I'm going to place it right above the 50%. Okay, so the 50% is the level that is of interest to us. So if price moves away from this FVG area and closes below the 50%, okay, you can assume it's heading down here at the bare minimum. And the area in question that I'm talking about is this zone right here. So let me just highlight that for you guys. Oops, that's the wrong one. Okay, so the area in question is this 223.9. That's the high side of that FVG, and the low side of that FVG is 140.5, right? So this is the level that we are assuming, right? Should price break below this FVG, so it comes into this zone right here, so it goes from where it is, it leaves the FVG zone, right, and closes below the 50%, it's fair to assume that some of you may not be using the weekly lows and weekly highs in this format, which is placing a Fibonacci on top of it. All right, now that's something that I've been doing for a while. I haven't mentioned it because I always thought that you guys would definitely be doing it, but in hindsight, I should have been showing that to you. Okay, so my apologies for that, because although it is obvious, it might not be obvious, right? So I lay that there. So this is the fib on top of this week, just to give us an idea where we need to be should certain conditions be met. Okay, so now that we've gotten that out of the way, oh, I forgot to call out the 50% level. So the 50% level that you want to be mindful of is 575.8, right? So that's the level that we want to see if decisions are made on this level or not. All right, so with that, let me get rid of this for a second, and let me place another more respectable channel on top. And I'm just going to draw it up to the current FVG zone. Okay, let's just do it like this. Yep, much better. All right, so as it stands, this is how everything looks, how we need to have everything prepared in terms of what we need to be mindful of as we move forward. So how I will be doing things, it will be this, right? Normally, I would wait for price to come below the FVG, so somewhere in this area over here, and then I will think about putting in a trade, right? I would definitely think about putting in a trade at this level. All right, some of you might want to be a little bit more cautious. So what you might want to do is you might say, hey, what I want to do is I want to wait until I get a close below the below the Fibonacci level, and then revise price downwards, right? And another thing as well, quick apologies for some weird reason, I'm confusing FVG with Fibonacci. I'm saying the things in the wrong order, right? So let's do that one more time, okay? So some of you, including myself, if we see price come to around this level, we get a nice close around this level over here, okay? Let me make that white, this area right here, okay? I would be comfortable putting in a trade, a sell to the downside, right? I'll be very comfortable doing that. But some of you might want to wait to get price come below the 50% level of the Fibonacci before you think about taking your trades downwards, right? If you're able to wait to get the confirmation on this side on this side of the Fibonacci, then that is fantastic. That's good training for you, because it means you're being patient and you're only getting in when it makes sense, right? Now, for those that have been in this game for a little bit longer and are comfortable with levels of risk in terms of how you position your trade, I'll be looking for it up here, right? If I decide for whatever reason, which I highly doubt I will do, that I'm going to be putting my sales anywhere in this FVG area, what that essentially means for me is I'm going to need to cover this area up here as my stop, right? Now, if you look at the gap between from here to here, or just say, let's just do it like this. Let's do it like this right here. So let's just say we took the trade from where it is right now, and then we ride it up to about here, because this is where you're going to have your stop, believe it or not, right? This is where you're going to have it, because you don't know what price is going to do. So the most sensible thing to do is to have your stop up here. All right, so we're looking at 496.3, right? That will be your stop. And then your potential profit, from what I'm looking at right now, is pretty much just over a 1-to-1. Just over, right? Yeah, see, just over. So it's not really dead on, right? So your profit that you'll be looking for if you're selling is roughly 624.4. All right. So for me, this would not be a righteous sell if I'm taking my sales in this location. Reason why my stop's too big. My stop's too big, right? Even if I get it dead on, because my stop is really large, right? Essentially, even if it moves against me, I have to do more work to recoup the losses that I would have incurred, right? So the sensible way of doing it, in my opinion, is you wait for price to close below the FVG or below the 50% line, okay? And then let's just say below the 50% line, let's just go with good practices, good behavior, right? Let's just go with that, right? What that essentially means is that 50% off on what your risk should have been had you decided to take it in the FVG zone as a whole. Because it's in the FVG zone, it does not necessarily mean that it's going to come out of the FVG zone in line with your bias, right? So it could just push all the way up and create a new higher high. Easily done, right? And we've seen this done many times before. So you have to wait to see if price is going to leave. And if it does leave, then you can position yourself, right? And if it does leave, then you can start throwing in a couple of justified assumptions. So for example, if market opens on a Monday and begins to fly all the way down, you can put in an early hypothetical call to say that the Monday is the high of the week, all right? And we're now waiting for the low of the week. So essentially, you just ride it down until you get a bounce or a daily high is taken out. So price, for example, let's just do this. So price is coming down. This is Monday, Tuesday, Wednesday, right? And let's just say hypothetically, it does that. How you will be positioning your trailing stop will be you be covering the high of each day. So day one, the Monday, your trailing stop is up here, right? Your stop loss will be up here after the Monday closes, right? Day two, the Tuesday, your stop loss is up here covering the high of the Tuesday. Wednesday, it comes down lower. You have a number of options. You can bring it all the way down. Okay, you can bring it all the way down to cover whatever position. But if it bounces on the Wednesday and flies all the way up, it's either your stop will be minimal or you will have a trading stop in place. Whichever one you're comfortable with is what you do, right? But that's how I would do it. And on saying that, it's important I say this. I'm not a financial advisor giving you financial advice. Everything you do on your trading platform, it's all on you because you're the ones pushing the buttons, you're the ones pressing go, you're the one pressing order fill, right? You're the one doing it all. It's not me. So the main thing is that I'm just here to assist you to look at the market in a way that maybe you're not looking at it, okay? And then see how you get on. And ultimately, you can always post your feedback, your positive news that you have in the comment section. All of that will be greatly appreciated. All right, all of that will be appreciated. So that will be the vibe that I'll be going off of in regards to if market was to take certain actions at the beginning of this week. But the main thing that you should take away from this, and I strongly recommend you put this on your chart, is first things first, locate the beginning of the week and the last day of the week, Monday to Friday. Locate that first, right? Then put your Fibonacci on top, then put your level of the 50% zone on there, because what we're looking for is we're looking for trend direction, right? This overall structure that we're seeing right here has a higher probability of breaking downwards, right? Now, you don't want to try to catch it when it's down here. You want to try to catch it maybe when it's just under the 50% zone, right? Which in turn will give you this move potentially all the way to this zone over here, which will be 171.9 on the high side of this FVG, and on the low side of this FVG, 857.1, right? So if you don't want to catch it under here, because obviously you're going to be losing out a little bit more than you want to, right? You've left some food on the table. Obviously, getting it up here is ideal, but we want to be sensible. We don't want to be stupid, and we don't want to make unnecessary mistakes, right? So what we want to do is we want to try to position ourselves under the 50%. That will be my recommendation. At least then you have a strong probability that it will be moving in your direction. If you have to hop off early, chances are it will be in this zone over here. But if it blasts past this zone, you can look forward to collecting all the gains down here. And this is what I want for you. Right, so with that said and done, my awesome traders from all around the world, right about now you should be seeing two thumbs. One of them is going to be on backtesting. There's 21 videos in total, useful information. Check them out and see if there's any gems you can extrapolate from all of that to use for yourself. Okay, and the second video is on the previous video to this one, so you make sure you go check that out too. And whilst you're doing all of that, I will see you amazing people on the next one.